The Neotel deal would have given Vodacom access to much-needed spectrum and a fibre network, which would have boosted its broadband rollout efforts. However, amid fierce opposition from competitors and regulatory hurdles, Vodacom walked away from the 7 billion rand bid in March. But despite this setback, Vodacom is trading near all-time highs. Joining us from Cape Town to discuss the sustainability of Vodacom's recent performance is Finweek contributor Moxima Gama. Mosh, thank you so much for joining us this afternoon. So they've walked away from its 7 billion rand. Where to from now in terms of the rolling out of their broadband efforts?
Okay, well, at this point they're looking to acquire a state-owned company, which is known as Broadband in Frako, actually. So so what they meant to do is they are meant to provide, or rather help government provide or meet their aim of providing at least 90% of South Africans with broadband by 2020. So the company actually provides fixed line infrastructure, which is currently in demand. So it looks like a very lucrative deal, despite other things that it is going through some financial problems. But it looks lucrative, and it looks like Vodacom, it will actually pan out because government is trying to sell some of their state-owned assets.
Marsha, how is it faring if we contrast what the Vodacom's doing with other competitors in the same industry? How's it faring?
You know, surprisingly, with this whole Neotel up and down and then failure at this point, it's done pretty well. It's holding up very well. If you look at it, it is outperforming its peers quite substantially. Its financials are stable. Its competition at this point is really MTN, and MTN did meet a bit of a bad patch. So it still comes out as the top performer within the sector.
We are expecting their results to come out this month. What should we be looking out for?
Well, you know, it's kind of trading at a very, very important, it's testing a very long-term trend line, which is dated back to 2013 in January. It has failed a few times to breach it, but I mean, if it does actually go through that trend line, we could see another upside of, at least 20% upside or even more for the next 2 years. Vodacom is sitting at a very good market cap, and you could see there is a lot of buying interest because there isn't really, it is the prettiest in the flock. So I do see some future movement upwards, specific if it does breach that resistance trend line, which looks like it probably will. If you do see any other downside of about at least 10%, then you must know it's failed and you probably want to switch out and into, but at this point I would stay long.
So just to wrap it up and make sure that we understand where you stand with Vodacom, as an investor, I should trade this share how?
Sorry, I didn't get that question very well.
As an investor, how should I trade this share? Can I get in now? Should I be waiting? What do I do?
So you would literally want to wait a little because it really needs to breach it. I think at this point, once it does go through that trend line, if you could see from the charts that is on the magazine, then you will kind of get a bit of growth. It isn't too late to get in. But you probably, if it does pull back, you'd probably want to just pick it up and then get more and aggressively. But it looks like MTN could then come back up a little, so there would be a bit of a switch. So just watch it, be cautiously long, in other words.
We will be sure to watch those that share price movement. Moxima, thank you so much. That was Finweek contributor Moxima Gama. Up next, we'll take a look at this week's Editor's Choice.